In this next session, we will hear from Dr. Weimin, Chief Scientist at Bank of China, on how the financial services sector has embraced digital transformation in this current COVID-19 pandemic. Handing over the time now to Dr. Guo for a close understanding of digital transformation in financial services.
Okay. A good day, everyone. And thanks to the high-speed internet and CDN service we're having right now, we can have this virtual meeting across different time zones. Just 10 years ago, the packet delay across continents on the public internet is hundreds of milliseconds, which made live streaming impossible. But today, with the development of new digital infrastructure, like cloud computing, high-speed mobile network, edge computing device, propel the growth of the digital economy. It is reshaping not only the market, but most importantly, the society, and gradually becoming the main factor of global growth. Data has become a new factor of production. The marginal cost of a digital product can be zero. Many economic models need to be rewritten. The pandemic has accelerated our pace to run into the digital age. On this diagram, we can see that online business has outgrown the offline business during the past year. And during the first half of 2020, online retail sales of physical goods increased by over 14%. And the proportion of online sales of physical goods in the total retail sales of consumer goods has increased to 25%. In the meanwhile, retail sales of consumer goods fell by over 11%. Even before the pandemic, there had been tremendous changes in many industries. We used to have to wait for a few years to get a new car model. Now, we not only have many new car models each year, we actually get many new car companies in a year. Today, Industry 4.0 is coming to us at a much quicker pace. Flexible and JIT production demands flexible financial product support. The business today will now be able to wait a few weeks for account receivable financing. They will demand instant settlement and just-in-time finance. The breakthrough in technology development, like digital twins, 5G network, blockchain, cloud computing, IoT, virtual reality, etc., will enable financial services to meet the demand of the industrial digitization. The challenge for today's institution is going to be much different from 10 years ago. Before COVID-19, we need to apply new technology to solve existing problems, like financial inclusive problem, or to lower costs, to increase efficiency, and to increase the selection of products. But post-epidemic, we need to apply new technology to solve upcoming problems. And the first important observation we are going to make today is that AI combined with big data and IoT technology will have new breakthroughs. AI has been used extensively in financial industries like chatbots and virtual personal assistants, profiling customers, streamlining process, and spotting patterns. And their benefits are increase in productivity, reduced costs, and improved quality. And we think that AI will become much more powerful when the necessary digital infrastructure is ready. For example, when a man works in a bank, the robot greets him. Suppose a man is from a small village in Scotland. The robot will not be able to understand him because general voice recognition is a problem of exponential complexity. But if we know the man's village, we'll know his dialect. And if we even know yesterday he called to ask about withdrawing 500 pounds, then the robot will be in a much better position to serve him. So AI will be much more powerful if the problem is localized and personalized with the help of big data and edge computing technology. Let's look at these two diagrams. The left one shows the scissors difference in the field of income distribution. We can see that the top 0.1% owns more than the bottom 9% of the people in America. The right diagram tells the difference of growth between digital industry and traditional industry. It has become the so-called K-shaped economy. The key factor here of difference actually is artificial intelligence. For the past 200 years, from steam engine to supercomputer, man's physical strength and brain power has been replaced by machines. Today, we are witnessing man's intelligence are being replaced, which will result in much less use of manpower in traditional business role. This will ultimately result in the disappearing of middle class as we have seen today. Man must find new roles in the coming digital age. And COVID-19 demands that the gap between skill possessed today and the skill needed tomorrow be narrowed very quickly. But skill gap is not the only gap. The second observation we are going to make is that the role of a person and also business will be redefined in the digital era. The world is changing so fast, people and business may be left behind. Just 2 years ago, some banking experts are saying that Bitcoin is of no value, but today they're also saying Bitcoin has tremendous intrinsic value. This is just an example of how big the skill gap we have, not only in workforce, but also in the top management. The challenge today is not only how to update your skills, but also how to utilize your skills, how to monetize your skills. And this needs paradigm shifts. A human resource cloud is a foundation to maximize human value. Human and machine need new infrastructure to cooperate. With these two observations in mind, we will make two predictions. First, retail banking must become AI first. The left diagram shows the functional structure of a general bank. We predict that 80% of the traditional banking positions in the retail sector will be replaced by AI to boost revenue, to lower cost, and the replaced people will need to uncover new, previously unrealized opportunities. The right diagram concluded by McKinsey shows the potential value of AI. You can see that it's tremendous. These are some examples of AI applications in retail finance. So we predict that almost all the roles in the retail finance could be replaced or reduced by deploying AI capability at scale. The second prediction is that the token application will reshape the wholesale finance. Because of time limitation, I will not go into great details, but I would just say that it will improve the efficiency of inter-enterprise payment. It will lower costs in cross-border settlement, automate internal risk control, and increase anti-money laundering capability. It will also reduce the cost of financing and enable penetration of credit across the supply chain, meet the requirement of the Industrial 4.0 development. And in conclusion, I will quote the prologue of A Tale of Two Cities by Dickens. It was the best of time. It was the worst of time. It was the spring of hope. It was the winter of despair. I wish everyone here will be your best time in the coming digital age. Thank you. And back to the
Quoting Dickens there, Dr. Guo, thank you for sharing it with us, the various digital transformations we should be expecting to see and experiences from the very financial services we use today.